Hello guys, today we are creating part B of activity 1. So on part B of activity 1, we're going to continue what we left behind on part A. So our question was, please, when you have a vehicle, we were required to calculate depreciations on the old asset, sold asset, and also the new asset, and we were required to prepare the ledger account of a vehicle, accumulated depreciation, and also the asset disposal. So you can pause this video if you have not attempted this question, and I'll give you the solution soon, because now we are just continuing or wrapping up the activity part A. And if you can you please just go and check part A of activity 1 on my YouTube channel. So our final solution for the ledger account of a vehicle is like this. You can mark your own and check if you got things correct, and also the accumulated depreciation ledger account will be like this, and also the asset disposal ledger account will be as follows. So here we got our depreciations calculations. You can pause this video and check. And also we're calculating depreciation for the new asset and also the sold asset, and we had the depreciation for the remaining asset, the old asset. So now I have promised in part A that I will explain to you depreciation on the old assets. So I'm going to explain how you calculate depreciation on the old assets. So please check this video, continue watching this video, understand how to calculate depreciation on old asset on all attempts. We are back, guys, to continue. So now I'm gonna teach you how to calculate depreciation on the old assets. So I mean the remaining assets which have been inside the business from the beginning of the financial year until the end of the financial year. So please watch this video, you'll understand. When you are required to calculate depreciation, you are required to calculate depreciation on the new asset, sold asset, and also the old assets. When I'm referring to the old asset, I'm referring to assets which has been inside the business from the beginning of the year until the end of the year. Let's say, for example, our assets are vehicles. Vehicles. So it means if at the beginning of the year, can you check this picture, drawing? If at the beginning of the year we had three vehicles, like this 1, 2, 3 vehicles, and also it means I'm saying at the beginning of the year we have 3 vehicles. So during the year we had this transaction. They said they sold one of their old vehicles. It means this one will be sold, and now they said they've purchased a new one, the different one. Let's say, for example, if we are dealing with taxis, that means if we had 3 quantums and now they bought just a sprinter, now it means we have the new one which is different from this one, and they bought it one during the year, during the current year. So it means at the end of the financial year, at the end of the year, we will have this when you'll be going to the garage. Okay, so now it means when you'll be required to calculate depreciation, it means the amount you have to first calculate the cost of the asset which has been being inside the business from the beginning of the year until the end of the year. So it means for 12 months. It means now when you are checking this, the only 2 assets or vehicles were inside the business from the beginning of the year until the end of the year, because they sold one, but the new one was not inside the business from the beginning of the year, but they bought it during the year. It means you cannot say the total cost of this asset, you'll say it's the old asset. No, you have to exclude the new one. If, for example, now let's say example 1, let's say for example, I'll say, okay, example 1, if you are given on your trial balance, on a trial balance, you are given the balances of vehicles. See, balance of the vehicles at beginning of the year. Let's say you are given a adjustment trial balance ne? Let's say you are given a pre-adjustment trial balance. So if you are given a pre-adjustment trial balance, it means the balance of the vehicle is at the beginning of the year. So it means on that balance, let's say for example, they said the balance of the vehicle is 100,000. It means inside this balance or the cost of that asset, it means you have to subtract what? And now you are required to calculate what? You need to calculate a depreciation for the old asset which has been inside the business from the beginning of the year until the end of the day. So when we are going back to our scenario, it means if they can say this vehicle, the cost of these vehicles, of these 3 vehicles is 100,000, it means now you are required at the end of the financial year, you are required to calculate depreciation. So you are required to calculate depreciation for the old assets which had been inside the business from the beginning of the until the end of the year. Now you are having, during the year, you'll be having this transaction where they sold an asset and also they bought an asset. So it means inside this 100,000 or the cost at the beginning of the year, you have to subtract the cost of the sold asset. You have to subtract what? The cost of sold asset. So you have to subtract what? The cost of the sold asset. The reason being, it means you'll after subtracting, you'll have the cost of the assets which have been inside the business from the beginning of the year until the end of the year. It means the remaining asset. Here I was just showing if you are given the balance at the beginning of the year on a trial balance, or you are just given a pre-adjustment trial balance. Okay. So another example. Let's say example 2. Let's say example 2. Now you are given the balance at the end. They said balance at year end. Let's say now they've given you the balance at the end of the year, or they can just give you a post adjustment. They've given you a post adjustment trial balance. It means when they've given you the post-adjustment trial balance or balance at the end of the year, now they say, oh, okay, our vehicles at the end of the year, the cost is 100,000. Let's go to our scenario. It means they will be referring to what? The cost of this asset. I mean, when they've recorded, everything was being recorded. And when you are checking your transaction, you have sold an asset, you bought an asset. So it means if at the end of the financial year, you have 3 assets like this, and they said the cost of this asset is 100,000, for example. So it means inside this cost, this cost of the new asset, it has been included inside. So you are trying to calculate you calculate only the cost of the sold asset. It means you want to do what? You have to subtract the new one, the new balance. You cannot subtract the sold cost. You not balance. You have to subtract the new cost, the cost of the new asset. You have to subtract the cost of the new asset. So you cannot subtract the cost of the sold asset. The reason they have already subtracted it, if they can give you the balance at the end of the year, it means they have already accounted for that balance, the cost of that new sold asset. So now you have to just subtract what? Yeah. New cost of the new asset, and you'll get the cost of the total cost of assets which have been inside the business from the beginning of the year until the end of the year. So now let's say here on this, I was talking about when the transactions has been recorded. If they have recorded the transactions, now if they have recorded the transactions, you'll do like this. Let's say now they have not recorded the transaction. Let's say now they have not recorded the transaction. How will you treat this adjustment? Now not recorded. See, they said no, this transaction has not been recorded. They sold an asset, they bought an asset. Yes, they said this transaction has not been recorded. It means now another example. Let's say example 3. So example 3, they said this transaction has not been recorded, and they're giving you balance at the beginning of the year. Let's say this transaction has not been recorded and they give you the balance at the beginning of the year. It means now you have to do what? Let's say now let's use 120,000. It means they said the total cost of the vehicles is 120,000. So, and you are required to calculate the cost of the asset which has been in the business from the beginning of the year until the end of the year. So now let's check on our scenario. If on our picture, if now they said the total cost of this asset is 120,000, means all assets which have been inside the business at the beginning of the year, the total cost was 120,000. Eh? And during the year they sold an asset, they purchased an asset. So now it means you have to subtract. Inside this cost, they've included what? The cost of the sold asset. It means it's still included because this transaction has not yet, they have not recorded this transaction or accounted this transaction. They will state on the question paper that they have not recorded this transaction. It means you have to subtract what? The cost of the sold asset, because this transaction has not been recorded. You cannot subtract the new one because the cost of the new asset has not been included in this. Ne? Let's say now, for example 4. They've given you the balance at the end. Balance at the end of the year. So now, if they've given you balance at the end of the year, now, and they said, let's say 120,000. They said this balance is for the total vehicles at the end of the year. On the trial balance, they just said vehicles 120,000. Eh? So you must please first ask yourself, inside this cost, they said no transaction has been recorded. They sold an asset and also purchased an asset. It means now inside this cost, there's a cost of the new, the cost of the sold asset. The reason they have not deducted it because they have not recorded the transaction. So it means inside this cost, there's cost of the sold asset. So but the cost of the new asset has not been included because of they have not recorded any transaction. It means now if you are calculating, you are given the balance at the end of the year and they said no transaction has been recorded. When they sold, they have not recorded the transaction, and also when they purchased the new asset, they have not recorded. It means now you have to subtract what? The cost of the sold asset. Cost of sold asset. You have to just subtract the cost of the sold asset so that you can get what? The balance, the total cost of the asset which has been inside the business from the beginning of the year until the end of the year. Just how you have to just please take some notes here and note that when you are having the balance, if for example, if they have recorded the transactions, example 1 and 2 will be applicable. These are the principles. And if they have not recorded the transaction, example 3 and 4 they will be applicable. Please make sure when you are calculating depreciation for the old, I mean the remaining, the assets which have been inside the business from the beginning of the year until the end of, you must first calculate the cost of that asset. So please follow and support this YouTube channel, Just Building Accountants. You'll be a good accountant if you can just follow my work. God bless you very much. Please subscribe and hit the notification button.